Welcome to our video today. Today we're going to be talking about the end of COVID restrictions and that new normal for businesses that we are now approaching. So let's jump in and have a look at what we need to be considering at the moment. So hopefully you can see the slides on screen, and let's get going onto what we're going to be covering today. So today we're really going to be having a look at what has happened as of the 19th of July and what that really means for your business. We're going to have a look at furlough and how that is going to be changing over the next few months. And then we've got a quick detour onto employees and holiday entitlements with changes that were brought in last year that may still be affecting businesses for the next little while. We're going to have a brief overview of the SEISS Grant number 5 and the other financial support available for those out there and what might be useful to you. Then we're going to be finishing off with some homeworking and what is taxable and what is not, and just a Making Tax Digital update of where we are with things and where it's all going shortly. So let's dive in. So what has happened as of the 19th of July 2021? And we're entering a new world of living with COVID and having to run our businesses with this way of life. Now, I'm sure many of you have not simply gone back to normal, and we wanted to really cover the key areas for businesses of things that they needed to consider from as many perspectives as possible and cover the financial ones in more detail. So what has actually changed as of the 19th, and what do you need to be considering? Well, the restrictions on movements and number limits have been removed. However, we've fall back onto arguably our health and safety legislation, and we need to remember it's our responsibility as an employer, as a business owner, to ensure the safety of our employees, contractors, customers, clients, and really that then puts the onus on you as the business owner or the health and safety officer in the business to consider what they feel is the best course of action to maintain everyone's safety. Now, this also applies to the social distancing requirements, which are also being lifted. So again, it falls within the health and safety legislation of keeping everyone safe. And you need to consider how you can make that work for your business so your business can prosper, but you obviously keep everyone who's having contact with your business safe as well. Now, the legal requirements to wear face coverings have been lifted in most circumstances, with a few quirks, which we'll see during 2021. Now, again, this comes under the health and safety provisions, and it's the responsibility of us, the employer, the business owner, the health and safety officer, to consider whether we still think they're relevant, they're not relevant, and how we want to operate the business moving forward. How would you like to operate that in your environment? What works, what numbers, what limits? There is many different perspectives, and it's just something you need to consider and put together your risk assessment to really assess what is going to be appropriate for your business. Now, there is no longer a work from home instruction from the government. Therefore, you can start making arrangements for bringing employees back into the office environment. From all these considerations, there is also an implication for your employees and the human aspect of this. For those working from home, they may not be completely comfortable coming back into the office all at once straight away. You need to consider whether they'd like to be wearing masks or not, and if they want to wear masks, should you be providing them or not? Should you have plastic shields still up in retail outlets and counters, or are you happy to remove them? Now, this all comes down to your level of risk and how you perceive it. But the main thing I'd probably say there is make sure you have put in place risk assessments, you've documented it, what you're doing, why are you doing it, to really make sure that you've kind of considered the different options available and what decisions you've made and why. For most businesses, requiring employees to be vaccinated is highly unlikely due to the number of legal reasons. But for some businesses, it may be that there is a need, such as care homes, but then you need to consider what you have in place, what policies you have in place in relation to vaccinations or not. Should you have one or shouldn't you have one? What are your thoughts on this area? What would your team like? The other question is, should they actually be informing you or not of whether they've had a vaccine or not? And this will very much depend on your business, what you do as a business, how it fits in. Main thing here is just remember the legal aspects, because you don't want to find that you are requiring someone to have a vaccine, but potentially they may not be entitled to have a vaccine for example, if you're employing apprentices under 18. So just have consideration for some of these factors, and you can make your decisions what is best for your business. Having seen a significant change in working patterns of everyone, there's likely to be some hybrid working arrangements that you need to put in place for your employees. Now, what do you have in place for this would be the first question, and how can you make it all work, or does it not work for your business? If you've got a retail outlet, obviously you need someone there at the shop window to actually take the transaction. Whereas if you're office based, there may be more scope for actually, do they need to be in an office or could they work from home? Obviously, the last year has proven for quite a lot of businesses, there is scope for home working. So it's how you want to look at introducing this or not introducing this for your business, and making sure that this really does work for your business. Now, there are some things you need to consider, and they're quite important things for you to consider. You need to consult with your team. You need to find out what they're wanting to do to see how you could make it work in your business. What roles can and cannot work like this? There may be some roles where you've got a telephone that needs answering and that phone is in your office, so someone needs to be in your office. But if you've got a VoIP phone, for example, that might not be a requirement. It may just be you need someone there to say hello to clients when they pop in. There are many different possibilities, and you just need to be open to see what will work for your business. Obviously, we are running businesses here, so there is cost implications. How much is it going to cost to make any changes or to do things differently? And how is it going to impact the workplace? Are you going to have too few people, not enough people? How does that have an impact? Consider the policies you have in place. If you don't have a full working from home policy or home working policy, then it may be that you need to actually put a policy together which you can use for your team members. Now, one thing we need to remember is inclusivity. So even if we have got some home workers as well as some office workers, we need to make sure that we're not picking on one group or another group, and how we're going to actually operate the business to keep everyone together and maintain well-being for all team members. We need to communicate with our team on what is happening. And that's quite crucial, because as a species, we probably don't really like change, which means we need to manage that change to make sure everyone is comfortable and happy. Although some people might not always be happy all the way along, but hopefully as things settle down, that manages itself so everyone is happy with the new normal that we will be approaching. There may need to be changes to contracts of employment. So if someone is actually going to be permanently working from home, then that potentially needs updating their contract of employment to put that down in writing so it's agreed between both parties. And obviously we need to consider the health and safety implications of things to remember what is safe for them doing at home, because all the same legislation applies as in an office. So they need to be working on appropriate chairs. They need to have things set up in a safe manner. Obviously we don't want wires trailing across their floor, so they have trip hazards. So all these things still need to be considered. You need to, at this point in time, I would say, consider how you want your business to look moving forward. What can it offer your team, and how can you deliver the service you provide to your clients in the same or a different way? What is going to work for your business? There are going to be lots of risk assessments to ensure we are considering the risk and putting the appropriate things in place to mitigate these risks. Is it going to be masks? Is it plastic barriers? Is it hand sanitizing? Is it cleaning services regularly? Consider for your business what you need to be doing to maintain appropriate standards to keep everyone safe for you and to ensure the continuation of your business. Now, a further question that you may need to consider is, should you be asking your employees to do a rapid lateral flow test? Now, you cannot get these as a business free now, and they will only be available up to the 19th of July if you did register. You could purchase private tests and provide them to employees, or you can ask them to order their own individual tests and get them to do the appropriate testing. You can ask them to order tests and complete them, informing you of the results if, again, your risk assessment shows that this type of requirement is appropriate and necessary. It may be you just recommend this to help keep the whole of the team safe, but don't have it as a requirement. The requirements for self-isolation remain in place, and employers should encourage those who are unwell to isolate to reduce future COVID outbreaks. And obviously this helps with maintaining the continuation of your business and helping it prosper and not have any major issues. NHS test and track is still encouraged, but no longer a legal requirement. So it's something you might want to do just to help keep us all safe. And the key really for all businesses is going to be have your contingency plan in place. If you do have an outbreak at your business, how are you going to manage that? How are you going to make sure that you don't literally have to close your doors for a week or 2 weeks while everyone is isolating or everyone is at home because they're not well? So really, this is all looking at how can you keep yourself safe, keep your employees, your team, everyone safe so that your business can hopefully prosper as we go into a new world of running our businesses. So let us move on to what is happening with furlough. Now, from the 1st of July 2021, the level of furlough is reducing down and employers will be asked to contribute towards the cost of their furloughed employees. So as you can see on screen, we've got things reducing from the 1st of July to 70%, then to 60% in August and September. Now, the employer will still need to make the 80% contribution and will have to pay the employer's contributions as well. Now, you can choose to top your employees' wages up to the 100% or just leave it at the 80%. That is your choice. After September, the furlough scheme, as far as we're aware, is going to be ceasing, and at that point the employer will be fully responsible for their employees' wages unless they unfortunately have to go down the route of redundancy. Obviously, if that is the route that you need to take, then ensure you get appropriate employment specialists in to manage that process correctly and give all the right notifications and consultation periods to do it properly. This will just make sure that you don't have any issues with any claims as an employer from those employees that have been made redundant. Hopefully, the furlough scheme is going to help in terms of cover salaries while the business gets back upon its feet over the next couple of months and we all see demand return to a normal level, especially for those businesses that really have struggled over the last little while. Let us move on to employees and holiday entitlements. So it's been an interesting year or two for taking holidays. Up until COVID struck, we obviously had normal holidays, people booking things, going away, not a problem. As soon as COVID hit, there was many businesses who suddenly either didn't need their employees or potentially they were working so hard that they didn't take holiday, or employees didn't want to take holiday because they couldn't go anywhere. Now, what the government introduced in 2020 was a law allowing employees and workers to carry up to 4 weeks statutory paid holiday into their next 2 holiday years. Now, this law applied for any holiday the employer or worker doesn't take because of COVID-19. So this is now still in place because we're in 2021, 2022. So it's just something to make sure you're managing to ensure that your employees are taking their holidays. As different countries open up and close, no doubt, there will be different options for employees to take their holidays and be able to go away or have staycations, whatever floats their boat. But this is just something to be aware of, that they can have carried their holiday forward and that you just need to make sure that it is being utilised over this period to fulfil those employment requirements. The self-employed income scheme grants. Now we are up to now the 5th grant, and as you can imagine, there have been changes each time they have progressed to a new grant. Now, this grant is to cover between the 1st of May 2021 and the 30th of September 2021. And the first step is really checking your trading status and when you must have traded. So for a self-employed individual or member of a partnership, you must have traded in both tax years for 2019 to 2020 and 2020 to 2021. So this does now bring anyone in who potentially couldn't claim an earlier grant. You can't claim a grant if you trade through a limited company or trust, which hopefully, as it's a self-employed one, is fairly self-explanatory. Stage 2 is your tax returns and trading profits. So you must have submitted your 2019 to 2020 tax return on or before the 2nd of March 2021. Now, the deadline was the 31st of March 2021, so it did allow for some late filing. So if you filed your tax return by that date, you will fall within. Your trading profits are no more than 50,000 and your trading profits are at least equal to your non-trading income. So if you have more than one type of income, you just need to watch to make sure that you aren't falling foul of this rule. If you're not eligible based on the trading profits in the 1920 return, they will look back at previous years. So you just need to look at contacting them to see whether or not you can make the claim. Now, the final step is deciding if you can claim. Now, when you can claim is that you intend to keep trading in 21-22, but you reasonably believe there will be a significant reduction in your trading profits due to the impact of COVID-19 between May and September. So if, for example, you can't trade at all, maybe you have a small shop and you can't open for whatever reason, then you would have an impact. If you're not able to go and visit clients because maybe you're visiting people in their own homes and no one wants you in their home, then that would again be another reason. So really have a think if you can see that you're going to have a significant reduction in your trading profits. Now, there may be some circumstances that you may need to take into consideration. Things like if you've got any late amended or returns that are under inquiry. Whether you're a member of a partnership, you may need to just consider the whole partnership. If you've had a new child or you have loans covered by loan charge provisions. If you're a military reservist or you're a non-resident, some of these may have an impact on what you can claim. So in terms of getting ready to make your claim, this claim is different to previous claims. In most cases, when making a claim, you'll need to tell them about your business turnover so they can work out what your grant is. And turnover in this particular purpose is taking into account your takings, fees, sales, or money earned or received by your business. And you'll need two different turnover figures. You'll need to work out your turnover for a 12-month period starting between the 1st of April 2020 and the 6th of April 2020, either the 2019 to the 2020 or the 2018 to the 2019. So basically you're looking at 2 years worth of trading that they will want, and they'll compare these figures to work out how much you'll actually get. When you don't have those figures, for example, you only started trading in 2019 to 20 and didn't trade in the previous years, they'll have a look at how things fit together. So it doesn't mean you can't get a grant, it just means that they will look at things slightly differently. So how much are you going to get becomes the next question. And this is what you'll be looking at. It's how much of an impact are you actually having on your turnover? So have you got 30% down or more, and you'll be looking at getting 80% of 3 months average trading profit. If it's less than 30% down, then you'll get 30% of 3 months average trading profits. So as you can see, things are going downwards in terms of the support, but there is still support there. To make the claim, the online service for the grant will be available shortly. It is expected to be going live late July 2021. The grant itself, when it is received and reported for your income tax point of view, it will be subject to income tax and self-employed national insurance contributions, and it will be reported on your 2021-2022 tax return, which obviously won't be due to be done until 2022 and submitted by the 31st of January 2023. The grant also counts towards your annual allowance for pension contributions. Let's have a look next at some other financial support available. Now, there is a test and trace support payment where your local council might give you up to £500 if you've been told to self-isolate, you live in England, you're on a low income and you cannot work from home and will lose income as a result of it. So that one, have a look into whether that might be possible for you. There is the New Start Employment and Support Allowance. So if you or your child has coronavirus, is self-isolating or shielding, you might be able to get this new employment and support allowance, and you can apply for it if you're under state pension age and you have made enough national insurance contributions over the last 2 to 3 years. There's the new Job Seekers Allowance. So if you are an employee and you are losing your job but looking for a job, you can apply for it. Now, this might be something, if you are making someone redundant, you may want to make them aware of this so that they can kind of get their support that they have available to them during the time between losing their role with yourselves and a new job that they are potentially going to be looking for. They can apply for it if they work less than 16 hours a week, they're under state pension age, and they've made enough national insurance contributions, usually by working as an employee. So something that you may be able to point them in that direction if, unfortunately, you have to make someone redundant. There's also universal credit, which, again, if you're making someone redundant or if you yourself need support, may be able to claim. And you have to have less than £16,000 in savings, and you have to be under state pension age. If you are getting tax credits, though, something to note is you will stop receiving them when you apply for universal credit. So these are interlinked systems that you either get tax credits or universal credits. So it's just something to be aware of. There is also a pension credit if both you and your partner have reached state pension age and your weekly income is below £177.10 for single people or £270.30 for couples. You might still be able to get it even if you do have some savings, have a pension, or own your own home. So there is ways that you may be able to claim some of those bits depending on what you are eligible for. So just some useful things, whether it be for yourself or whether it be things to make your employees aware of in different circumstances to just support your team. So home working, what is taxable and what is not? Let's have a look at some of the things that we possibly will have been seeing employees dealing with over the last 12 to whatever number of months it may have been for home working. And the first one is mobile phones and SIM cards. If you have provided a mobile phone without a restriction on private use, this is limited to one per employee, but this is non-taxable. If an employee is using their own phones, then it is limited that they can only claim expenses on things over and above their standard package. So if, for example, they are paying £20 per month for their contract and they spend £30 because they've had £10 of work calls, they'll be able to claim the £10, not the £20 that is their standard. If you provide a phone to them, then the business itself can claim the whole telephone costs through the business. Now, broadband, if your employee already pays for the broadband, then there's no additional expenses that can be claimed. If it's needed for work purposes and one wasn't already available and you've put in the cost, then the broadband fee can be reimbursed for you and is non-taxable. In this case, the broadband is provided for business and any private use must be limited. So in essence, it's a similar sort of approach that if they've already got it, there's nothing that can be claimed. If they haven't got it and they need it for work purposes, then it can be claimed because it's just for business purposes. Now, laptop, tablets, computers, if they're mainly for business purposes and not for significant personal use, then these are non-taxable. So that again is good news from yours and an employee's point of view. Now, in terms of reimbursing expenses for office equipment that your employee has bought, if, for example, your employee needs to buy home office equipment to allow them to work from home, we tend to say they need to discuss this with you in advance. If you reimburse the employee the actual cost of the purchase, then it's not taxable, provided there's not really any significant private use. And if you do not reimburse, then they can claim tax relief for these purchases on their tax return or on a P87 form, as long as the amount claimed is incurred wholly, exclusively, and necessarily in the performance of their duties of employment. The occasions in which an employee would qualify to claim tax relief would be rare, as there are strict things in the wholly, necessarily, and exclusively, which can sometimes create a little difficulty. Now, your employee will need to keep records of their purchase and claim for the exact amount and provide that to you on their expense claim form, as would be normal for things like mileage and other bits, which we'll cover in a second. Now, employee provided loans. We've got a salary or advance or loan that could be provided because they might be struggling with different things. Loans provided with value of less than 10,000 in a tax year are non-taxable, and then you just need to make sure you get appropriate paperwork from them to confirm that you can make loan deductions from their salary each month, and that does need to be in writing to make sure it's an allowable deduction off their salary. Now, additional expenses on heating, electricity, broadband, all those sorts of things. Now, there is a use of home as office allowance, which was £4 a week and is £6 a week from 6th of April 2020, and is non-taxable for additional household expenses incurred when they're working from home. Now, if their expenses are going to be higher, then what they would need to do is provide evidence, such as electricity bills and water bills and all the different bills that they would need to do to show that actually working from home has been a higher expense than that. But for a lot of, if it's just laptops and computers, then it's probably not significant, the additional cost. So that £6 per week would be sufficient to cover working from home for the majority of individuals that you might be employing. Now, temporary accommodation, if your employee needs to self-isolate but cannot do so in their own home, you can reimburse hotel expenses and subsistence costs, but these are taxable, so would need reporting on a P11D. Now, employees using their own car, there is the obvious 45p per mile mileage rate, which is free of tax and national insurance contributions. Now, if you don't pay a mileage allowance, then your employee can claim that through their personal tax account and set that off against their employment income to reduce their tax bill for them on a personal basis. Now, moving on to private use, for items which are taxable, exemptions for work-related benefits must show that there is no significant private use. Now, the tax office does accept that you have a policy about private use, which is clearly stated to your employees and sets out the circumstances that you as an employer are happy with private use of certain equipment, services that you as a business have that they might be able to use for minimal private use. But any decision on the employer to recover the cost of that private use, that's a commercial decision. So if, for example, they're using your phone lines to do personal calls, it's up to you whether you actually charge them for those calls or whether you go, it's minimal and you just incur the cost. That's your decision. Significant private use is not necessarily based on time spent on different uses. It should really be considered based on the employee's duties and need for them to use that equipment. So it's just something to really have consideration on and probably set limits on how you want that to run in your business and what your expectations are for your team so that you're both on the same page in regards to that. Now, any expenses or benefits which are related to coronavirus can be reported on a PAYE settlement agreement, and that means you can settle the tax and national insurance contributions on any of the benefits or expenses that you have needed to receive or provide. Even though the responsibility would be usually on your employee or on both of you, you as the employer can take that kind of responsibility. Now, that does only apply to coronavirus related items only. So a new desk can go onto the PAYE settlement agreement, but for example, a new sofa that they might have got would not. If you're currently putting things on payrolling benefits in kind, you may continue to do that. And you may also put it on a P11D return if it's a taxable benefit that needs to be reported. Obviously, if it's non-taxable and no benefit has arisen, then you don't need to report it. So for quite a few things that I've just mentioned, there's probably no reporting requirements to do. The main thing is if there is something to report, you can either do it on the P11D or you can see about arranging a PAYE settlement agreement, which means that you will basically take the full cost on behalf of the employees. Now, the final thing to mention today is our Making Tax Digital update. So I just wanted to get everyone on the same page on how this all fits together. As things are moving, things are developing and are happening. Just because we have had COVID doesn't mean there aren't changes happening and on the horizon. Let me start with Making Tax Digital for VAT. If you are a VAT registered business with VAT over the VAT threshold of 85,000, you're required to follow the Making Tax Digital rules, and they have been in place for a number of years. If you are, however, under the threshold and voluntary registered, then historically you have not needed to be following the Making Tax Digital regulation. As of the 5th of April, 6th of April 2022, all VAT registered businesses, including those below the threshold, will need to be following the Making Tax Digital regulations. So if you are under the threshold but VAT registered, you'll need to start getting things in place to make sure that you are set up for April 2022. Anyone who is currently using Making Tax Digital from April 2021 will need to make sure that they've got their digital links sorted. So what I mean by digital links is you have your records for sales on another system and you use something like QuickBooks for your bookkeeping and your VAT return. Now, historically, you could take the information from system one, your sales system, and just go, oh, there are the figures, let me manually enter that information into my QuickBooks system and do my VAT return. As of April this year, what they said is we don't want that manual entry. We want you to download the data from your sales system, upload it to your QuickBooks, so you have not physically had to type anything or put anything in place. Now, there is some exemptions in regards to that, so you don't have to do absolutely everything with that, but the key data should have very little interaction. This is possible with most systems. It is just a matter of finding the best way to make it work. If you need any assistance with that side of things, please let us know, and we are there to support our clients in ensuring they tick those boxes. The next thing for making tax digital is for income tax. Now, this is all self-employed businesses and landlords, and is going to impact those with annual business income or property income above 10,000. Or alternatively, if you have self-employed income and property income, if both of those added together take you over 10,000, simply having both under does not discount you, and you will have to follow these new regulations. This is all kicking in for income tax from the 6th of April 2023. Therefore, there is time to deal with setting things up, but the sooner you get sorted, the better, to make sure that you are happy with what you are doing before the requirement comes into play. Now, the requirement really relates to actually having to maintain digital records, make quarterly submissions on approved software. This is all still developing, and more information will be available in due course as this is all released from HMRC and the software providers to ensure we are supporting our clients and businesses in getting this up to speed. The final area to mention is making tax digital for corporation tax, which at the minute we're just at consultation period. So it is not coming in just yet. We have no definitive dates. However, we're expecting it to come in not before 2026. On the basis that that one came in quite smoothly, the income tax side of things is likely to come in relatively smoothly. We're expecting it to come in 2026, 2027. So limited companies will then have to maintain digital records and start making quarterly submissions of some sort. More information on that will be shared as time goes on and as this information becomes more available and we know what is actually happening. So hopefully that gives you kind of the bigger picture on what is happening with making tax digital, and you can make sure you put those plans into your business plan as you are getting things back up and running in the foreseeable future. Thank you for listening to our video today. If you do have any questions, please do add them to the comments below on any of the topics we've covered in this video. And we look forward to hearing from you soon, and we'll be in touch with any further information as it comes to light.